All right, guys. It's Abe Forest here. Today, 26th of June, 2026. I'm simply sharing my thought about the financial markets generally. So, you will find out that the dollar is trending, and there's something I usually say, and I said it yesterday in my previous episode, that once the dollar is trending, every other market is trending. If the dollar is ranging, then every other market is what is ranging. And we tend to make money as a trader when the market is trending. When you look at dollar has broken out from this resistance level that's held this market down for quite a number of years. And why is the dollar trending? It's as a result of the interest rate increase, because looking at the national debt all over the whole world globally, you notice that the national debt of every countries are increasing, and that's due to the fact that there's inflation. And this inflation we're talking about is as a result of the shock in energy supply from the Middle East. When the Strait of Hormuz was shut down due to the war that is between Iran, Israel, and United States of America. So this inflation came into play because the Middle East couldn't supply the major oil. They couldn't supply oil all over the global economy. So because of that, the energy prices increase, is skyrocketed, and because of that, it brings about inflation. And now inflation, every country has to curtail their benchmark of inflation. For instance, the American government has a benchmark of 2%, while every other government has their own benchmark. And the new Fed chair that was being appointed, the person of Kevin Walsh, is an hawkish type of president, Fed chair, which means that he increased the interest rate from what it was before to 3.75. In fact, he didn't increase, it was just 3.75 because people were expecting that it was going to cut the interest rate. Previous Fed shares have been cutting rate all over the places, printing money. There has been monetary easing all over the places, but this Fed share is kind of tightening things up due to the fact that there's inflation and it needs to curtail this inflation. And because of this, we'll find out that every other economy and every other countries are following suit. The Federal Reserve lets the interest rate remain at 3.75. The Reserve Bank of Australia increased the interest rate to 4.35, while the Bank of England increased the interest rate to 3.75. The European Central Bank increased to 2.40, while the Bank of Canada increased to 2.25. The Reserve Bank of New Zealand let the interest rate to be 2.25. The Bank of Japan increased the interest rate to 1.0. So, and this in turn is having effect on their bonds. And these bonds we are talking about, it's like a debt to every country. So once the interest rate is being increased, it means that the bond yields has to increase. Once the bond yields increase, the bond prices goes down. And once the bond prices goes down, it have effect on the amount of debt rates that each country are going to be owing, as the case may be. So that alone, it's tells us that the every economy is trying to tighten things up. There's nothing like money printing for now because of this inflation, because they need to curtail this inflation. Now this is my dollar, and I said if dollar is trending, every other currency is trending. And gone are the days when dollar has been in this tight range for 1 year. If you look at it closely, dollar has been in this tight range for 1 year, but now dollar is trending back, and every other currency are doing the same, are following suit, following through the steps of what dollar is doing, being the global reserve currency. So now going to my 2-year yield, you find out that the market is going up higher. The yield is increasing due to the increase in interest rate. And I said that if the interest rate is being increased, the bond yields are going to increase, and at the same time the bond prices are going to go down. You can see from this diagram that the bond prices are kind of going down. That in its own is going to bring about low prices of bonds, and so many people are going to want to buy bonds because the dollar is very, very lucrative, and that in its own has an effect on gold. Now because dollar is trending, dollar is moving up higher. Don't forget in my previous episode that dollar has a kind of inverse relationship with gold. If dollar is going up higher, then the gold is going to be what? Going to the downside. Now, if dollar is trending to the upside, then expect gold to go to the what? To the downside. They have this inverse relationship. Now, gold is coming to the downside. Can you see? For quite a number of days now, gold has been coming to the downside, and that is due to the fact that the dollar is strong, and that is what that talks about. Now, looking at silver, which also is a precious metal, follows what gold does, because they are both precious metal. So they're having inverse relationship with the dollar. So looking at it, you can see that silver is coming down while gold too is coming down as well. You notice that because of the ceasefire in Iran, the US oil is coming down as well to $68 per barrel, before the war started. So though when the war started, it's skyrocketed to like $118 per barrel, but right now it has come down because of the ceasefire in the Middle East. Now, moving forward, we'll talk about the other currencies. Now, I said that if the dollar is moving, every other currency are going to move. So, looking at the GBP USD, if the dollar is going up, GBP USD has to come down, and that is because if there's no news from the Bank of England, like the GBP USD, the Great Britain does not have any news or nothing to affect the direction of the market. But if dollar is strong, of course the GBP USD has to go down. So Euro USD, the same thing, has to go down. That is how the market is being structured, and every other USD pairs that are by the right hand side, as to if USD is by the right hand side, which is the quote price, it means that they have to sell because dollar is trending to the upside. So that is the way the market is being structured. Not everybody knows this, but I would have to tell you, with experience over the years, I can tell you for free that if dollar is trending, of course every other asset that is USD related has to go down. Alright, so unless it's on the quote side, like the USD JPY, the USD CAD. If you look at USD CAD is going to be trending up to the upside because the dollar is trending to the upside too. So look at USD CAD, for instance. Let's see. You see that USD CAD is trending to the upside. Can you see? USD CAD has to go to the upside because dollar is strong as against the CAD. You understand? So that is how the market is being structured. Not everybody knows this, but from my experience, I've been able to see that. So BTC USD, because if dollar is at your base price, it means that it has to trend because dollar is trending to the upside, to the upward direction. So if your USD CAD, for instance, you're having USD CAD as a pair, USD is on the base side, it means that it has to trend to the upside. But if it is on the quote side, it has to trend to the downside because dollar is trending to the upside. The reverse is the case. If the US dollar is trending downwards, then every other asset on the on the base price have to trend upward. Then on the quote side has to trend upward. You understand? So note that. So that is that about the markets today. So I'm going to be seeing you guys in another episode. Alright, take care. Bye bye.